Bitcoin has been sitting on the edge of a cliff for the last 3 weeks, but time won't last forever. These moves will eventually come to an end, and we're expecting further downside, but not by much. However, there are the masses who are still looking for prices sub 20K and prices sub 15K. These are very, very significant low points. And if one is not aware of where these prices are, they will lose again, just as they've done in the past. Now, I'm not saying this to put anyone down, but this is how 90% of people lose in the market. They're unaware of market sentiment, they're unaware of timing, and they're unaware of price levels, very, very significant price levels. That's what we look at here on the channel, as we are your home of macro cycle analysis, where we study the past to forecast the future across Bitcoin, crypto, stocks, and real estate. Guys, let's get into today's video, and I'll share with you some of the fantastic updates from some of our members as well. You know where to look for those sort of things if you want to get in on TIA Premium, become a member to get those gains. Link in the top of the video description. So this has been a big narrative. So we talk really heavily about narratives where 5, 7, 8 stocks are the only things that are driving up these markets. And these markets being NASDAQ, the S&P, they have gone on huge runs. We were looking at lows coming in last year. We've talked about it in real time on the channel in those videos, which many of you remember. June, October, December, and March being very, very significant low points in the market based on historic cycles that we have seen happen for decades upon decades upon decades. And yes, many people still miss these sorts of things, but that is just part of the market. We've learned to understand that, and we've learned to appreciate that this is basically our edge in the market, that people don't want to see cycles for what they are. That's okay. Let's move on and do the best we can with our own investing. So the technology sector has enjoyed a quick rebound from a scare during August. So we've seen that 3 weeks down for the NASDAQ and the S&P, and this is the tech sector within the S&P. So what's happened from there? It wasn't just a few of the big names that get all the attention driving the rally either. So that's what we've had since that point. The advanced decline line for this sector showed broad and impressive gains. And so when this particular quick thrust in an important sector, so the important sector being the technology sector, when this happens, it has generally showed very significant gains over the next 6 to 12 months. Don't let the others fool you in a potential collapse in these markets. Looking at the NASDAQ, they want these things to go back under 13,000 or 12,000, or even take out the low at around 10,500. That's very, very unlikely. And I'm happy, we'll call it very, very unlikely. We don't want to say that it's impossible, but it's extremely unlikely when you keep getting signal after signal after signal. As we've talked about here on the channel, going through each of these videos, you'll see that we look a lot at this sort of data, basically the quant data, and of course our TA and market sentiment and cycles. So this is telling us the 8 times out of 10, right here, 82% and 80%, we see a positive result going back over 28 signals 6 to 12 months later, because we are looking at the broader picture here, the macro cycle. We're not interested in what happens tomorrow or next week. That's short-term stuff, and the majority of people are not doing that extremely short-term trading. And if they are, they know what to do. They subscribe to TI Premium and follow a very strict trading plan to make these gains. So well done to you guys over there as well. So 28 signals, 6 to 12 months later, 80% of the time, 8 out of 10 times, 4 out of 5 times, the same percentage there, you get a positive return in 6 months, in 12 months, and those gains 16 to 24%, the average of the max gains. If there are losses, 5%. So look out if there are losses 2 out of 10 times or 1 out of 5 times. If there's a loss, it's 5%. How bad could that be? Roughly speaking, 5% to the downside. 14,700 for the NASDAQ, and the S&P is going to be quite similar. When we look over here, where's 5% put us? Right there, 4280. It's above all of these levels that everyone is talking about, or at least the perma bears are talking about. It is absolutely wild to think that we're still in a bear market, but nonetheless, the majority still think that, because that is exactly how these markets work. Most are fearful most of the time, even though markets go up most of the time. That's a very, very big gain. Pay particular attention to what's happening over the next 6 to 12 months, and more importantly, closer to where we are over the next, say, month to 3 months. This is something that I wanted to get onto a while ago, sent to me by Seth, and now he's posted on his Twitter. Fantastic stuff here for the NASDAQ. So we're looking here at the NASDAQ. Of course, we're going to get to Bitcoin and the potential moves for BTC once we start to see these strong moves coming back into the stock markets. Only 4 times since 1985 has the NASDAQ been down 20% below its 200-day moving average, and then risen 20% above the 200-day moving average. So it went nice and deep under the 200-day and then above the 200-day. When that happens, look the F out. Rallies occur. So we've seen rallies here that this data shows from the breadth thrust. First time in 6 months when this signal shows. Number of days since technology sector breadth thrust. Basically when it goes from a reading of under 35, the 10-day exponential moving average, and then above it. Essentially, it's just showing have stocks dropped fast and then come back fast. That's all it is. That's all it means. I get my words out. That's all it means. When they drop fast and bounce back fast, it typically shows that we are about to see another big, strong move. This one is just showing on the chart to 2018, but when you look at the data here of the 28 signals going back to 1952 of the S&P and the technology, as I went through, very, very strong returns at that point. Now, I brought up this one here. This is for the NASDAQ. It's going back to 1985. This chart is 2009, 2003, 1991. There is an August low. There is an August low. There is an August low. And Seth also pointed this out as well. The next low that comes in, we will get a pullback. There has to be a pullback. So it's not like we can't just go straight up from that point again. Maybe we'll come up and maybe we'll come back down and test. Typically, well, at least 100% of the time from this data, the low has not come in lower than the August low. We're now in September. That's getting pretty specific with where the movement of the market is going. How does this all relate to BTC? We will find out. Let's keep going with this. The stock markets are looking pretty healthy and pretty strong, regardless of what the majority are saying that the markets should be going down. We've talked about this for a long time. I basically just want to instill the positivity around the markets, what we're seeing, because the majority is saying the opposite. And I get it. All the fundamentals make sense that the things should be falling. The thing they don't get is timing. They usually get the timing very, very wrong. What they're saying, probably correct. It's true. But the timing is so far out, that's how they keep losing money in the market. And I'm expecting a big collapse, but not anytime soon because the data is not showing the collapse soon, as in the next 6 to 12 months. So this is another big one. And look out for 2024. Speaking of collapses, it's not like we're going to get a collapse, but there's just not that much of a growth coming through. We've had very big quarters, and after very big quarters for the stock markets, typically we see flat or a decline. Look at Q3, which is exactly what we're in now. Then we see it pump again because everyone's like, oh, well, that's the pullback. Let's get onto it again and try to make those big gains like we saw already over the last 9 months. And of course, it fizzles out. And this is our election year. And it's probably going to fizzle out at that point. And then you lead into the post-election year, Q1, which is 2025, Q1. It's basically flat and negative, okay? So everyone has missed out, and there's only basically one-ish more significant opportunity, and next year is probably going to be a reasonable opportunity. And then you get a dump, or basically a nothing, because everyone was too late. And then for 2025, markets start to run up again. Q3, typically flat, typically weak, typically flat. That's going to be your best Q3, which is next year. But normally Q3 isn't that good. And then you get that run again in Q4. So 2025 is looking like a flat down, up, flat, up-ish type scenario. Okay? Time running out for BTC. Let's get onto that now. This is where we are. This is our stage 2 as we break down the bull market cycle. Bull market cycle, roughly 3 years. And we're just putting aside anyone who is talking about even further collapses to Bitcoin. As I've pointed out for the last 10 or so minutes, looking at the stock markets, things are looking pretty rosy for the coming 3 months, 6 months, 12 months. So we can't expect that BTC is going to collapse past previous lows. Bitcoin typically collapses and puts in cycle lows when the stock market is basically flat or going into its own bear market. And it doesn't look like that's happening over the next 3, 6, 12 months, which only leads us to believe that we're going to see relatively flat prices, somewhere between your sort of 23s-ish up to whatever those tops are, mid-30s, mid-40s, which is still below the all-time high, but above the cycle low. So we're basically churning away here. That's number 2. That's our stage 2 here as I break the 3 years down into 6-month periods. And just to give us a bit of an idea of how the stages progress. So looking at time running out, we are in September, and basically we have October left in this stage 2. In stage 3, last cycle, we had a small rally up from the December low, which looked like we were about to start to move and then put in a higher accumulation zone. But of course, COVID happened, and then we started to put in that high accumulation zone late in the 3rd and then early in the 4th before we took off. Now, in the previous cycle to that, 2020, 2015, 2016, the end of the 2nd had a rally, then paused, and then had another rally. So we had a reaccumulation at a higher price, and then another reaccumulation beginning at a higher price. Well, basically, we had the pump out and then the reaccumulation. So time is running out for those, hopefully, smarter investors, whereby we don't get these moves down forever and they drag on at lower and lower prices, just flattening out. What we have seen is that once we do get to those points towards the end of these 6 months, something typically moves. So we've got the end of the 2nd, we've got that move out in December. So basically from December low to that run up, 63%. Let's take a look at the previous cycle here. End of the 2nd was moved from the top to the low here, down 30%, but you got to be aware that we ran up basically 100 or so percent. Now I'm using the closing price here because that move down in August did not break the previous low. It's just some technicalities there. So basically when we look at that, the move happened in that 2nd phase by about 100%. Then we moved into the 3rd, first half of the 3rd, sounds a bit tongue twistery, but that was flat reaccumulating before it pumped again. So looking at that next pump, low to the top, about 120 odd percent. So although we're still below the all-time high, these accumulation periods do not last forever. And if we sit on our hands and do nothing at this stage, we could potentially miss out on 25K, just like many missed out before, like many, I believe, have missed out on prices under 20,000, and like they did missing out on prices under 18,000. We had the FTX collapse in November, we had the December pause, and then through January we pumped. And many sat on their hands during November and December hoping for lower prices. You know who they were, calling for 14Ks, 12Ks, 8Ks, 3Ks, and it didn't happen. We got a pump from that point. So once time runs out, that's it. Whatever the price ends up at, that's the best you're going to get, and it's time to move on to the next price targets. Same thing happens at the top. Once time runs out at the top, whatever the price ends up at, that's it. That's as high as you're going to get, and down she comes for the next stage of the cycle, or basically the cycle flipping from bull to bear, bear to bull. So pay particular attention to that. We're coming towards the end of this 2nd phase. Let's see where price ends up. In terms of a short-term perspective, we're looking still towards somewhere around 23 to 24K. I've got here 23,600, which is the 50% level. So keep an eye on these, and if they do bounce, that's probably going to be the signal to say that that's the end of those lower prices, and we're mounting our way back towards those mid to, well, in this case, higher 20,000s. We're not there yet. We still need to see whether we do get that move down. And yes, there's still a lot of people saying we need to come back down and take out whatever gaps they're talking about at 20 and 21,000. It doesn't have to occur like it didn't occur back here at 9,000. And there's been plenty of other examples where it doesn't occur either. There's many, many reasons why people believe it has to go down there. The market doesn't have to do anything. So keep an eye on these levels. In terms of the shorter term time targets as well. We looked at the long term here, coming towards the end of this, which is around end of October, early November, and then our 3rd period is basically the first half of 2024. But going a little bit shorter here, we've been down now, or at this area, for about 3 weeks, coming into our 4th week. Okay, so looking out to what we've seen in the past, approximately 5 weeks. We had a dump here in May, and then we had the bounce in June. So the market basically moved around the similar-ish price with a negative sentiment for about that last 5 weeks, and the total move down was 9 weeks. Okay, go back to the FTX collapse. From that low to when the market started to break out, you had about 8 weeks. Going back again to the collapse in 2021, you had about 9 weeks after that May collapse. So the May bottom hit there, then you had the June and the July. You had about 9 weeks to collect your thoughts, get your shit together, start buying your Bitcoin or your cryptos before the market took off again. Going back again, we've got plenty of these areas to look at. You had about 4 weeks here before the market had a pump. Sure, it went lower again, but the point is, these are the time frames that markets last before you see that pump. And the reason I bring that one up is you'll get these accumulation zones or reaccumulation and then the pump. And what happens is you feel like you've missed out and then you start buying on the pump. So in some cases, it keeps going and you're like, sweet, lucky I bought. In this case, it dumped all the way back down. So you feel like an idiot for waiting, and then you feel like a double idiot for buying the pump, and then you feel like a friggin' fool because the market just came all the way back. That's why I bring these up. This is the hard part when it comes to investing, is just getting over the stuff that goes on in your head. Back at this low, you had 6 weeks, and then you had to endure. I say endure because basically it broke out and a lot of people were thinking this was it. Another 6 weeks of markets going up before the pandemic, and then the bounce back. Okay, is that starting to make sense? We saw this pump up into May 2020. Then you had about 10 weeks before the market broke out in the 11th week. Okay, where are we now? Let's have a look. Looking at the time frame from the top, from the drag down, we're into our 8th week. Time is running out. If we look at 11 or 12 weeks, that takes us late September, early October. So maybe we see the low in mid-September and then a bounce out here and a move forward. There's a lot of maybes, ifs, buts, and I know that triggers some people, but essentially when those people saying maybes, ifs, and buts, I don't think they have a clue of what they're doing in the market. The market is all about maybes, ifs, and buts. There are no guarantees. So you just need to be prepared for these time frames and just look at how things have progressed over the history of the market and what time frames continue to repeat in these markets. And we often see that rough 2-ish or so months, your 8, 9-ish weeks in Bitcoin before the mood pivots. Time's running out for BTC. Make sure you are following here. Like and subscribe to the channel if you haven't already. And if you happen to be in Paros, let me know. I'm in the Greek islands. Follow me on Twitter, join over there. And a quick shout out here for a video that came through in the catalog, the back catalog 5 years ago. Now, I was going to put this at the beginning of the video, but I thought I'd leave it for the diehard fans at the end of the video. Someone commented here on a video, this is so good to watch back retrospectively. And it was on a video I did in 2018. And yes, I talk way more then than I do now. So be prepared, and I'm warning you that 5 years ago, I was reading this from Mr. Phil Anderson, and this is how I've been trading based on a lot of these time cycles. This is in 2018. Start planning for a downturn after 2019. And it's not going to be serious, which it wasn't when we know in retrospect now. At the time, it felt extremely serious. And what we're talking about here is COVID 2020. Amidst all the really good news, which is what happened in 2018, 2019 for the stock markets, not of course for Bitcoin, that's coming out over the next 18 months. And I thought I'd bring this up because another comment came through after that. More coverage on the housing market or recommendations for creators as competent as yourself with such information. I appreciate the kind words here with competency and all that, but I'm really just studying the markets and playing it the way I see fit. This particular video here goes through all of this, and it laid it out almost month for month blows as to what happened during that period. So for those that don't know what I'm talking about, it is the 18.6 year cycle. We're in this section right now. Commodities booming, huge infrastructure spending. I know it goes against basically what everyone else is talking about in the media, but I'm giving you this to have a look at so that you can start to piece some of the crazy pieces together on why 90% of people lose money in the markets. 5 years ago, go and give it a watch after this. Stock market collapse 2020. All I can say is go watch it, like and subscribe. See you guys at the next video. Till then, peace out.